Hello, promoted Markets. This is Aurora, and we'll be with you with the global economic outlook in the week ahead, which is going to be the week number 18. As always, let's first check what we had previous week, and then we can go forward and check the week ahead. Previous week, generally, we had two central banks meetings in China and Russia, Chinese and Russian central banks, PBOC and Central Bank of Russia, CBRT. Both they held the interest rates unchanged. In China, 1 year and 3 years loan prime rates at 3.1 and 3.6% unchanged. And in Russia, central bank held the interest rate at 21%. On the other data, the most important data that we had from United States, the housing market. The housing market, as you know, as we talked about that during the week, if you follow the short videos, new home sales dropped by 7.4% and existing home sales dropped by 5.9%, while the 30 years loan mortgage rate increased to 6.9%. The main reason is because of that, lower inventories and higher prices held the buyers back, while in the new home sales sector, in the new home sales, actually, in new home sectors, the builders, they are offering interesting sales condition, which is helping the buyers and sellers to go forward and make more deal. Another data last week we had PMI numbers. As we talked in the previous weeks, as we were expecting, mostly the manufacturing PMIs in Europe and USA increased slightly, while the service sector slightly fell. Main reason maybe because of the tariffs and the many countries trying to go towards their initial productions. In Britain also we had the retail sales numbers, and we saw that the retail sales increase in the United Kingdom, and that was the main reason of that. It was maybe because of the before retails, before tariffs to be applied, and maybe it could be support somehow the retail sales market. But generally, the data that we had from United Kingdom in the previous weeks, they were not such a good data, especially in the manufacturing sectors and service sectors both. Generally, the economic activities in United Kingdom was weak. Out of the economic data, the geopolitical tensions, we know the peace talks in Russia, between the Russia and Ukraine, somehow the Russia, better say Russia and the United States, gave more positive signals, while in the trade side and trade tensions, we had some positive news about the slowing some tariffs. So that's support the market slightly to increase after sell-offs that we had in the previous weeks. In the week ahead, the market focus will change towards American inflation and labor market data, while in Asia also we have central bank meeting in Japan and Chinese PMI numbers, which should be watched more closely. In United States, we will Wednesday and Thursday will be very important. Wednesday, Thursday, and actually Friday will be important days, while the May 1st will be a holiday in many markets. From United States, we are expecting to see the core personal income and expectations and core PC price index for both first quarter and March. And we generally expecting to see slightly lower inflation, personal inflation than the digits, which means that in the monthly cases, especially, we can say that somehow the prices are controlled. Maybe mostly the most reason actually is because of the lower oil and energy prices. We know that the oil and energy prices has been falling in the previous weeks, so that can support the lower inflation, personal inflation, which means that if that happened, we can say that it could be negative for US dollar and positive for stock markets, as it means that the central banks is getting its target inflation, which means that more rate cut will be it can be expected. However, the Friday's labor market data will be very important. Actually, I have to mention that on Thursday we will have the GDP numbers as well. The GDP on Wednesday, the GDP expected to show that the U.S. Economy improved only 0.1% in the first quarter. Actually, that's the first that's the initial or the first numbers that we're going to have from US or generally not from the US, from Europe also we're going to have it from the first quarter's expectations. That's the first reviewed, but just generally the data is supposed to shows that the US economy improved much slower in the first quarter. ISM numbers also supposed to ISM survey is also supposed to be published on Thursday, which we're expecting to see both manufacturing and service PMIs, and that is to show the weaker numbers. However, also on top of that, we're going to have the consumer confidence digits. This consumer confidence also we are expecting to see falling from 92 to 80, 87 or 88. I don't know. It's kind of some probably on Wednesday. We're going to have it on Wednesday. But market focus return on Friday's labor market data. We expect to see between 130 and 150,000 newly created jobs, but unemployment rate supposed to stay unchanged at 4.2%. The labor market conditions right now is like this. The labor market conditions still stay high. There is a sign of the cooling. Small businesses, especially, they are holding back from more hiring. Generally, the most of businesses, but especially the small businesses, they are hiring. I mean, they are trying to not to hire more employees, but at the same time, they do not fire the client. They do not fire their employees. So the firing is low. I mean, at the same time, hiring also is low. That's why this somehow the balance between the hiring and firing. So the newly created jobs also it could be for the people who they left their jobs, so the new created jobs they came to some new people they came instead of them. That's why this balance will help the market to labor market to hold the unemployment rate around 4.2%. Actually, it's not a bad number. Just that's why I'm telling that the labor market is still strong, showing some cooling signal, but still strong. Most of businesses in the United States, they are waiting and see to see what's going to happen. This the fate of this trade tariffs. The tariff war and trade war, and how they're going to affect the economy more effectively and more deep and clearly to see what's going to happen. So then they're going to decide what can do with their employees. But the average income also supposed to increase by 0.3% monthly, almost 3.9 or 4% annually, which means normally it's around the historical numbers. So it's just something so we can say this good for the labor market, and the US labor market generally is positive. The US dollar index and S&P 500 and generally the stock market in the United States going to depend, their movements directly depend on these numbers. If any weakening inflation, slowing inflation, and we see that some signals of weakening, slowing inflation and weakening economic activities, especially with the PMIs and GDP numbers, then we can say that the central bank will have more reasons to go for more than 2 rate cuts. But if we see the labor market increasing very well, I mean, for example, if unemployment rate improve to 4.1%, then we can say at the same time, the inflation numbers also do not give the more weakening signal or slowing signal. Then we can say that the central bank will think about still about 2 rate cuts by 2025, which means that the US dollar index can get strong again. That's about the US market. In Eurozone also, we're going to have inflation that we are expecting to see the inflation unchanged at 2.4, around 2.4, 2.5% for Eurozone, while the more focus in Eurozone will be on GDP numbers, which is supposed to be published on Wednesday, if I'm not mistaken. We expect to see the Eurozone GDP to increase by 0.2%. On first quarter, repeating the same increase of the fourth quarter of 2020. For generally, we can say that the economy in Eurozone is somehow habiting or matching or fixing itself with this current condition. Also, in China, we're going to have PMI numbers. We expect to see both manufacturing and the service PMI to slightly slows after March, in April after March increase, which mainly were because of the more export before tariffs to be applied. On top of that, on Thursday, we're going to have on Thursday, May 1st, we're going to have the central bank meeting in Japan, where we expect to see the BOJ to hold the rates at 0.5% unchanged. Japanese economy is improving very well, not very well, improving well or acceptable in acceptable pace, while the inflation is still higher than the current BOJ targets, which means that the central bank will have more reasons, especially, so, we are not expecting to any rate cut or change in the policy in this meeting, but we are expecting to see some signals of rate hike, not rate cut, sorry, some signals for rate hiking probably in second quarter, in the first, not in the first quarter, in the second quarter, probably in July meeting. So that's why we have to wait and see how Mr. Ueda is going to react in the press conference and answer the questions in the press conference. But generally, we expect to see somehow slightly hawkish tone in the statement and the press conference, which means that the Japanese yen can get some support after this meeting. Besides that, we're gonna have too many other small and other data, but generally that these numbers and these digits, they will be the most important data to be watched next week. Let's check the chart and see what's going on in the chart. That's a US dollar chart. As we talked previous week, we were expecting to see some correction after shortfall that is sell-off that we had, shortfall that we had in the previous weeks. We expect still to see 101 for US dollar index, or around 101 mark for US dollar index, and then, but in the midterm, we expect to see the US dollar index around 98 and 100 mark. But for the short term, the correction, especially if the labor market data is fine, gets better, we expect to see some correction towards 101. And but as I mentioned, between 98 and 100 is the long-term area that we are expecting to see US dollar. With the current conditions, US dollar is getting slightly in a very short term, is getting stronger, and then side movement while the geopolitical tensions continues and trade war as well. There are the reason to say that the gold still will be in buy, but it doesn't mean that gold can continue so much further. The gold is still trying to be stabilized. It's priced around 3,300 and 3,400, most probably around this area. Price going to be more stable, but we don't have too much reason to say that the gold is going to boom further or to fall further. Now is the time for rest for the gold. Same for silver, around this current levels between 3,300 and 3,400. In the energy market, oil still moving side movement, having a side movement between is 38.2 and 61.8 Fibonacci levels of previous movements between 61 and $61.70 and $65.70. We are expecting to see the side movement still going further. Weaker numbers, lower digits will be so hard to see as Saudi Arabia is trying to manipulate and control the market. While on the other hand, we can say that the US exports also slowed further. Actually, in the previous weeks, we saw the slightly weaker export in the US oil market. The number of the rig counts is still increasing, but the exports are slightly low, maybe because because of the season, the more people they are trying to go to the because of the weather is changing, so we are getting closer to the better weather to have a travel, and then slightly later we're going to have the time for holidays. So that's why the people they're going to use more petrol in roads. So that's why probably the inventor is going to spend more there in the United States. So the price is going to be stable for now between $61 and $65. We don't expect any specific big change if something politically or geopolitically not happen. On the stock market, S&P 500 had a short recovery, but generally the overall downtrend still is the same. We don't have any reason to say that this downtrend changed, unless if it moves above 5,600 on in the chart. But for now, after correction, we expect to see the more pressure on the U.S. economy, especially with 0.1% GDP growth. So which means that the stock markets can be again in a downtrend, slight downtrend, but at the same time, we have the earnings. These earnings, they are somehow better than expectations, but if you if you check them with the historical data, they are not so good. So that's why maybe in the short term they gave some they somehow encourage the markets, but in a midterm and a long term they are not still enough to change the market trend for now. Uptrend in a second quarter, the late second quarter can be seen in the stock markets probably. In the cryptocurrency market, Bitcoin above 92,000 still is a positive in the buy, and as long as the trend above 87,000, we can see the Bitcoin is still buy. We have very important level at 79,000, but 89,000 in the first initial pivot, actually, we can say important pivot here. Generally, the cryptocurrencies market is still encouraging gain, especially as long as the Bitcoin is trading above $87,000, we can say the uptrend is continuing. If you had any other question, that was what happened previous week and our expectations for next week. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.